All right, the countdown is on for the holiday shopping season, and waning consumer confidence is already having an impact on retailers. Seasonal hiring is expected to hit a 15-year low this year as inflation takes a bite out of consumer pockets. Yeah, that's kind of gross. Joining us right now to talk much more about this is Forrester Research retail analyst Sucharita Kodali. Sucharita, let's talk a little bit about, we know consumer confidence is waning. We know that consumers are feeling a pinch from inflation and higher energy costs again. What do you think this holiday shopping season is going to shape up? What's it going to look like?
Well, the retail season overall this year has been pretty soft. It has essentially kept pace with inflation. When you look at the absolute numbers, the nominal numbers, they are certainly higher than they have ever been. But the shopper really isn't keeping up with the level of inflation, particularly in a lot of those core holiday categories like apparel or electronics. So when that's already happening through much of 2023, I'm not anticipating a great Q4 for the holiday season at all. The sectors that are growing, as we saw from the Darden numbers, is like food away from home. The grocery sector is growing, but that's not really seasonal, and that's not going to really make an impact on those retailers that are hoping for a great Q4.
Why do you think hiring's going to be at lower levels or maybe existing levels for most of these companies? Is it because they're expecting less in sales? Is it because you think they're going to be more efficient in terms of efficient, meaning there's going to be less workers around the store to help you out?
Yeah, it's interesting that some of those numbers have actually been trending lower for a couple of years now. We saw some spikes during the early part of the pandemic, but then it really wasn't as high, and for instance, in 2022 either. But yet sales were higher in 2022. So it does suggest that some part of the softening in hiring is not just due to an expectation of softer demand, but it's that maybe retailers are expecting more of their more of their sales to shift to e-commerce. It could be that they just may be using more technology in the stores to either manage their task management or to help just allocate labor in a more efficient way. So that does seem to be part of what is a factor here. But there's also no doubt that their labor costs have to be held steady. And given that we're at all-time high levels of hourly wages, these retailers just don't have the ability to add more. So they're going to have to figure out what they need to do to even add more technology and automate more to make those stores as smooth running as possible during a critical time period.
You say Amazon seems to be the outlier. How so, and why is that?
Yeah, so it's interesting. You mentioned those expectations around lower hiring numbers. Amazon is one that has come out and is expecting higher hiring volume in 2023 during the holiday season than ever before. They announced that they're going to hire 250,000 more workers during the holiday season. That was even higher than anything that they had announced during the pandemic. So they're certainly expecting a lot. But the question is whether that's going to actually show up in sales or whether it's because they've opened a lot of micro fulfillment centers, a lot of smaller DCs around the U.S., and they just may be more labor intensive. Usually when we think of an Amazon DC, they're millions of square feet and they're highly automated, lots of robotics. But some of these last mile facilities are the ones that could be driving more. That actually suggests that maybe they're going to be capturing more of those last mile deliveries and capturing more share from UPS and FedEx.